Hi everyone, and welcome to another RF crypto video. On today's markets, the prices have gone down quite significantly. The market itself is down by 4%, and the global crypto market cap is down to 1.8 trillion. Just as a reminder, a few weeks ago, even I think it was a week ago, the global crypto market cap was at $2.2 trillion. And in the space of a bit more than a week, it has lost $400 billion in value. I don't think this is just exclusive to the crypto market because we have seen losses in the traditional stock markets as well, especially in the Asian markets. For example, the Indian Sensex index has fallen by almost 3% in the last 24 hours, which might be one of the factors that caused the prices of cryptocurrencies to go down. The markets are being very risk averse. There was an expectation that prices would go down given that the inflation rates are at all-time highs both in Europe and in the United States. Also, the fact that the conflict in Eastern Europe is still ongoing and it is showing signs of further escalation. There are more threats by one side that they're going to strengthen their attacks in the other side's capital city, and the fact that there has been threats of the use of nuclear weapons, which obviously puts people a little bit jittery and they tend to become more risk averse, putting their money in safer assets. And because crypto is a more risky asset, which is highly unregulated, they rather take their money out of crypto and put it into stocks and bonds and maybe even leave some in cash because now they expect the inflation rate to go down due to the tapering of the Federal Reserve's balance sheet and as well as an increase in interest rates. And paradoxically and ironically, that is another cause of the decrease in the price of the cryptocurrencies, given that increase in interest rates means that it is more expensive to borrow money, so there is less money available to invest in higher risk stocks. Because if you have a lot of money, it's easy to invest part of it in blue chip stocks like Apple and Facebook and such, and then the rest you put it in your higher risk stocks hoping for a higher reward. But if you have little money, you will be careful with what you do with the money. So you will tend to be more risk averse. You will tend to take less risks and place your money not in cryptos, but in safer stocks, bonds, or fixed deposits. And if you look all the way down, everything is red, barring a few coins, which obviously have their own token specific factors, which have caused their prices to shoot up. But your top 50 coins, most of them are severely down. Looking at the price of Bitcoin, we see that Bitcoin was trading between the $40,000 and $42,000 band. The support level was tested about 1, 2, 3, 4, 5, 6 times. And on the sixth test, it broke through. The bears won. The prices went all the way down from 40,000 to about 38,500, and now it is stabilized around 38,800 to 38,900. And now we have new support and resistance levels, with the new support level being 38,000 and the new resistance level being 40,000. Even though there are good news in the markets, there is an increase in the news about regulation, there is news of increased adoption and further developments. That's not enough to push the prices higher because we're not living in a stage where green pastures are coming. For example, late 2021, when we saw that massive rally where the price of Bitcoin went to almost 70,000, that was when we were seeing a decrease in COVID infections, and it was like the light at the end of the COVID tunnel. But now COVID is still here. And on top of that, we have the conflict in Eastern Europe. Those two social and geopolitical situations are causing severe downward pressures on the price of cryptocurrencies, specifically Bitcoin. Coupled with high inflation and increased interest rates, we do see all the signs for a bear market to be there. But because there are so many good news in the market nowadays, the negative effects of all those factors pushing the prices down, combined with the positive news, is causing the price to kind of stabilize. Obviously, when you go a certain amount of time with not a lot of significant good news, the negative part always wins and it pushes the prices down. But we'll have to see, obviously. Hopefully the situation in Eastern Europe gets resolved soon. And I think once that happens and we are faced with good news, especially with Ethereum 2.0 coming out soon, I think we'll see the prices of Bitcoin and other cryptocurrencies just shoot up. It might even reach its all-time high once again, but that's all dependent on the geopolitical situation, on the social situation, on how well the United States and the European Union implement their monetary policies and fiscal policies to control inflation, but at the same time maintain a positive economic growth rate. We see that leverage ratio is at the all-time high, even though prices went down. One thing that this tells us, which is very paradoxical, is that a lot or most of the leverage positions are betting that the prices will go down, which means that they're in the short position. So we see a massive drop in price, but we don't see a decrease in the leverage ratio at all, meaning that those positions are still open. These guys are making a massive profit. Someone who got in here or someone who shorted in here has made a massive profit because the price of Bitcoin has gone down by $7,000 since then. So this just tells us that the markets are quite bearish. The situation isn't all roses, and people are now sort of realizing that, hey, there are a lot of problems going on in the world. Crypto is a risky asset. Let's bet against it. And this is where this massive increase in leverage comes from. And it's showing no signs of slowing down. Bitcoin's average transaction fees are the lowest in 2 years at 1.04. At one point in April 2021, the average Bitcoin transaction fee was almost at $63, and today it's only $1, so think about that. It's incredible. This number of $1.039, it's a number which was last recorded back in June 2020. So a Bitcoin transaction fee is basically the cost to transfer any amount of Bitcoin, which is also directly proportional to the time it takes to validate and complete the transaction. And the fact that the Bitcoin transaction price went down is a good sign, as opposed to Ethereum, which depends on its network activity to maintain high gas fees. Bitcoin doesn't work that way. The more miners you have mining Bitcoin, the higher the hash rate, which means that there is higher computational power to mine a block of Bitcoin. When there is higher computational power to mine Bitcoin, the fees gets reduced because the network becomes a lot more efficient. So the decrease from $62.788 down to $1.039 is a good sign, because it means that a lot of people are getting into Bitcoin mining. Bitcoin network is becoming more robust. We see a long-term commitment to the sustainability of the Bitcoin. Finally, I want to speak about Terra's UST stablecoin, which has flipped BUSD or Binance USD to become third largest stablecoin in the world. UST's total market cap has surged 15% over the past 30 days, and it now sits at roughly $17.5 billion. And the asset is now trailing behind the biggest stablecoin, which is USDT, and it stands at $82.8 billion, and USDC coin at $50 billion. So it still has a long way to go until it starts competing with Tether and USDC. However, since mid-November, and this we're talking about 5 months, the market cap went up by 5 times. So if it can keep this momentum going of massive upwards movement, I see it competing with the biggest coins in a short period of time. Also, the fact that Terra's co-founder Do Kwon vowed that the project will accrue $10 billion worth of Bitcoin to back its UST reserves gave UST a lot more credibility. It made people believe that Do Kwon and Terra are backing USDT to the maximum, and they have the reserves to show for the coins that are in circulation, and they're there to invest for the long term. This means that people now feel safer holding on to UST because they see that it has longevity and it is a safe asset to hold. For every stablecoin in the market, they have to have $1 in reserve, and $10 billion of that is going to be Bitcoin. So if you're backing your stablecoin with another cryptocurrency, that just shows that the company has a lot of trust in the crypto market, and it boosts the crypto user base's confidence in that coin. And that's why we have seen such a massive jump in UST's market cap. And with that, we come to the end of today's video. I hope you enjoyed this video. If you did, please leave a like, hit the subscribe button, and share this with your family and friends. Invest wisely, and cheers.